Hey everybody, welcome back to another live stream. Before we get into the show,
coming to you live from our studio in Atlanta, Georgia, this is the A1 Trading Daily Show. Whether markets are rising or falling, we're here to keep you up to date with the latest market news. Join us as we trade currencies, commodities, and indices live, Monday through Friday.
good morning everybody, and welcome back to another A1 Trading Daily Live show where we jump into the markets. And wow, what a start to the markets here today. We've got some volatility already settling in. We are seeing gold go to the moon, but then also come back down from the moon and shoot back up again to retest the moon. And then, we're all over the place this morning, but regardless of what happens, we're here and we've got commentary for you guys. Don't you worry. You can rely on us. We are here Monday through Friday doing our live streams, and I am long gold. So as this price moves, so does my money. So we'll see what happens, which I know is interesting for traders. So we got a trade on here. I've held this gold trade off and on. I've been trading long on gold the last few days, and so I'm still long on gold. I will pretty much be watching gold going into this PPI number this morning, because this PPI number is pretty important, because what we're going to be looking at here today is PPI numbers. Now, this is, of course, following what we had on yesterday's numbers. Yesterday, same time, same place, we were doing commentary on CPI numbers. Consumer Price Index came out yesterday, and it was, in fact, less than expected. It was cooler than expected. Markets rallied on this. And when I say markets, what I'm talking about is counters to the dollar. You had a boost in stocks. You had a boost in gold. You saw the euro catch a little bit of a bid. The pound, the Australian dollar, they caught some upside off of yesterday's CPI numbers. Of course, today is PPI, which is further up the chain of the supply chain. PPI constitutes the producer price index. So of course, when you've got the consumer price index, this is what you and I, when we go to the store and we buy eggs, right, or whatever we buy. I don't know what you guys buy. The consumer price index is, of course, what is very, very focused on. But so is the PPI. This is the producer price index. It's further up the chain, and it can sometimes give some, sort of forecasting for future CPIs. PPI matters a lot. So we are going to be watching that number today. And again, for the newer traders who are getting into fundamentals, you are in the right place. Welcome to the channel. Where we learn together, we go through stuff together. I learn stuff as I go along. I don't claim to know absolutely everything with this stuff, but I'm hopefully here to give the newer traders some further insights on what is going on and market commentary. I mean, I don't know everything, guys. Yesterday, I had to ask Ivan a couple questions about the CPI number. He explained it very well to me, and I learned something. So I'm not here claiming I know absolutely everything, but I love being here, and I'm hoping that you guys do as well. Hey, hit that thumbs up button and let's jump into some charts here as we get ready for PPI numbers coming out in 7 minutes or so here. Someone in the chat just asked me, Nick, do you ever trade silver? So silver is an interesting trade. Silver, I could go into a whole rant about silver versus gold. Silver is more of, in some ways, a commodity, I would say, than gold. It is used in, iPhones, and it's used all across the manufacturing world, right? So is gold, but I feel that, and the market generally views silver as more of a commodity. So in a time of recession, gold may outperform silver. At least that's historically what we generally see. So it depends what you want to trade. For me, I prefer gold, but for active trading, but I don't mind silver either. So sometimes I will trade it. Speaking of gold, where we're currently at, we tagged support here and we held pretty stubbornly. In fact, this is where I got in yesterday on my gold trade. So I am long. My plan is to stop out of gold if we break through the lows today. If we break through those lows, I will be stopping out of my position. My stop loss is approximately right here, and I will lose a couple $100 off of that if that occurs. So again, we'll see how this comes out. I'm not trading the news per se. I'm holding a swing trade. If the news goes against me, if it sort of, what's the word I'm looking for? If it sort of unwinds what we saw from CPI numbers, if it takes us out of the lows, you know, if a PPI number sort of reflects something very different than what we saw yesterday's report, meaning hotter than expected inflation, if we see something like that drastically, I'll be taken out of my stop loss, and I'll be very happy to do so, because again, that would sort of, from a fundamental perspective, put me on pause with my gold idea. Here's a look at the euro. For those of you guys who are euro traders out there, I want to point you in the direction of what I saw this morning. You've got the euro breaking through key levels of support, which I find to be very interesting as we go into today, watching out for you know, this move to sort of make a decisive stance. Because what I'm talking about with that is that if we get PPI numbers that are hotter than expected, meaning inflation concerns arise again, you probably see the euro lose further ground against the dollar. In that situation, any sort of pullbacks, I would say short term, the euro bears probably have something to work with there. Not really a trade that I'm personally after, but something to take note of. Now, also, if PPI numbers come out cooler than expected, this thing could very well come right back into this range, and again, sort of be an untradeable asset for me the remainder of this week. Euro is not something I'm personally looking to trade, but of course, I try and give commentary on several charts for people who trade different things. We talk indices, we talk commodities, and we talk currency pairs. That is what we do on the channel. You guys know my favorite things to trade, the indices and gold. But of course, I'll dip my feet into currencies as well. So here's the S&P 500, which is, you know, it's catching some, it's making up some of its lost ground here recently with the Fed's sort of hawkish tone. We're now starting to see, again, those inflation numbers came out and gave some reassurance to the market. What I'm looking for personally, I'm not trading the S&P right now. I'm watching it, but I'm very much sort of just, we're in this choppy range. I'd love to see if we can get a breakout. If we get better than expected inflation numbers all day long, I'm looking for pullback plays. I'm looking for expansion plays. I'm a buyer if we get inflation to continue to come down, because again, that could point towards, hey, things are headed in the right direction. There's evidence of potentially not having to see too many more rate hikes or, you know, even rate cuts that could be sort of appropriate at some point towards the end of the year going into next year. These things, in my opinion, would be a bullish case scenario for stocks. Of course, we'll have commentary all along the way. You guys know on my channel, I'm sharing every day what I am looking at, what I am trading, so on and so forth. No nonsense, real profit and loss, no hype, no fake stuff. So if you enjoy that, if you appreciate that, help me out. Hit that thumbs up button down below, get more people in the live stream, and subscribe to the channel if you're the new person around here. So there you go. Yes, guys, also we've got about 2 minutes to go. I'm going to set up my charts. I'm going to get us ready here for the event. But real quick, I just want to say also that if you guys have not already entered our $500 Bitcoin giveaway, for the new viewers who are also in the audience, here's your lucky day. Today, we are giving away $500 in Bitcoin. If you guys are not already, well, we're not giving it away today. We're giving it away at the end of the month. But if you guys want to enter today for a chance to win, it's free to enter. There's no catch. All you have to do is click the link that's being dropped in the chat right now. You can see it just popped up right here below me. My producer just put it in there. Thank you to James for that. So guys, click this link and just send a message saying you want to join the $500 Bitcoin giveaway. Let Hallie know she is here in the office. She's helping us out this morning. She's super nice, and she will help you out with getting your chance to win. Guys, we've got the PPI numbers coming out in just under a minute here. While you guys are doing that, I am going to go ahead and get my charts set up for the event. We've got the S&P 500 in the top left here, guys. We've got the gold chart in the bottom left, and we're going to put the dollar index top right and we'll put, let's put a yen pair because we didn't talk about a yen pair. Let's put the dollar yen bottom right. So here is your view of everything at once so that we can watch the spike if there is going to be one together. Now, PPI in the past has been very volatile. Other times it does not a whole lot. We're here for that purpose. We show up, we put in the work. I'm wearing a collared shirt today. You know, we're here putting in the work. This is we're trying to bring the professionalism. Let's see what we get here for PPI for last month. All right, and here we go, guys. PPI numbers should be coming out here, and a little bit of a reaction here. USD JPY selling off, gold challenging the highs. There it goes. S&P rallying a little bit, dollar coming down. First reaction, probably a cooler than expected PPI number. There we go. Gold trading up to 2041, just barely printing at 2041. Nice pop there on gold. The S&P also catching a bit of a bid, retreating or bringing back some of its losses over the night. Trading here that we had. You've got dollar yen selling off pretty hard, and the dollar also yet again following suit to yesterday's CPI number, seeing a little bit of some downward pressure on this. So here we go. We had unemployment claims, guys, came out cooler than expected. I'm sorry, not cooler than expected. More unemployment claims filed than expected. That's big. We also had cooler than expected month over month, and core remained unchanged month over month, but it seems that this is probably in correlation to the numbers that we saw yesterday. Confirming CPI numbers, I would say that this does sort of continue to be the case from yesterday's price action, a continuation sign. So let's go back into our individual charts and we'll take a look here. Again, you guys know I'm long gold, so let's go take a look and see how things are going. So yes, still long gold as of this entry that we got yesterday around this area. So we are looking good on that. Let's pull up the P&L. It's not a big move, but we are still up about $168 off this initial move. Again, experienced a little bit of drawdown on this trade, but this trade was shared inside of our Discord channel. If you guys are not already inside of our Discord channel, this is what it looks like, and this is the trade that I took. So again, no hindsight speaking here. I'm not just showing you guys winners all the time because again, I take losses like everybody else. But I did take this trade yesterday on gold. I put my stop loss in, and again, so far here, we're seeing a nice little pop. We'll see if that can sustain itself. But I would say that the numbers that we got, PPI and CPI, great stuff here. I would say this was in line with what we wanted to see as gold bulls here, in my opinion. Again, CPI and PPI numbers both coming out cooler than expected here. So this is really great for the gold trade. Again, if you guys are not already inside of the Discord, by the way, you can get these trade alerts sent to you. And I want to clarify, this is not a blind copy signal service. I do not advocate for that. I'm not a fan of that. This is quote unquote what you would traditionally call a signals service, but more importantly, what it is, it's more a trade alert service where you can actually see the purpose behind the trades, the full explanations and breakdowns behind each trade, pictures, screenshots, analysis. This is not something where it's just meant to be a blind copy. This is meant to add insights so that traders can look over the shoulder of myself, Frank, and Ivan, our three traders here at A1, and just see what we're doing and why. Not copy, not just do the lazy stuff. We are here trying to actually share insightful stuff to traders looking to learn. So if you would like to join this Discord channel, check it out. Ask us about our Discord. We have a free one, and we also have a paid one where you can get access to the trade alerts. If you guys want to ask about the trade alerts, this link just got dropped here. Click that link. You can ask about the Discord channel. And if you guys are interested in getting access to the premium trade alerts, that is also available there for you. If you want to ask Hallie about that, she is in office here this morning. So there you go. Yeah, look at this. So gold popped here a little bit, made a move up to at 1.2041, retreated off those highs since. We'll see if they can challenge them once more. Let's see the dollar. The dollar took a little bit of a beat here to the downside there. 4-hour chart looking pretty interesting here. Still trading within this range. And honestly, this is why I have not really paid attention a lot to most currency pairs right now. The dollar is just ranging, and when the dollar's ranging like this, I don't have a lot of interest in trading it because, again, it can stay in this range for weeks on end, as it has, right? So, dollar has been very stuck in this range, have not done too much with it. And, until we get a substantial breakout one way or the other, I really don't have much of an interest in trading it. So that's where I'm at with it. The dollar, again, I think that, you still could potentially see a retest of these highs, just sort of continuing this range pattern that we've been in. But any sign of a breakout, if I'm wrong, if something changes, if, markets could be fickle, if we get some sort of emotionally driven volatility, and something changes, we'll be here, of course, to cover it. So yeah, again, gold still holding the support, and I like to see this, right? So my thesis here for gold is I am bullish as of this retest here. If it breaks this low, that's going to nullify my idea for a long trade. But if it makes its way up to the previous highs, my goal will be to lock in more profit with a trailing stop. This is how I personally trade. I do not think that this is the superior way to trade or anything. It's just what I like to do. It's what I'm comfortable doing. I like to trail stops. What I'm aiming for here is a bigger move to the upside. I think gold has potential here to retest the highs that we've seen. Now, if it doesn't, I have a stop loss in place, right? I'm not just throwing out predictions and going all in on these, right? Because that would be irresponsible. As a trader, my goal is to, build a opinion, an educated guess as to essentially where I think price is going to go. But then, everybody has an opinion, everybody has a guess. How are you going to manage if you're wrong? Because there are plenty of times where I'm wrong. So if I'm wrong, what am I going to do? Well, again, I'm going to stop out under these lows. That is my stop out point as I've gone over. So that is where I'm at with gold, shooting for a return back to the highs around 2050 to 2070. That's where I'm looking to really start trailing a stop loss. But then I'm very curious to see if there's any potential for a bigger all-time high breakout on gold. This is right around the all-time high in terms of US dollars that gold has traded. So will be very interesting to see if that can be challenged or potentially even dethroned as the all-time high going into the remainder of this year. So yeah, that's where I'm at. We'll watch out for that. How much is the subscription? Yeah, if you want information, again, we've got people on deck who are able to help you. If you guys want access to the Discord, if you want to subscribe to the Discord channel, it comes with coaching webinars. We have an educational portal. We have several people on our staff who help traders within the community. Of course, it comes with the trade alerts where you could see all the trades being taken with full explanations, all that stuff. If you have any questions, please, feel free, drop a chat with us here. Take that to Hallie, and she will help you out there. So there you go. We'd love to have you in the Discord. We've got a great community going on. We've got plenty of people, very active chat room going on. And of course, yours truly and Ivan, the other guy who you guys see on my streams pretty often, he's in here doing his thing. We are very active trying to help out the community as much as we can. So, we've been running this community, just a little bit of context. This community, so we've been a software company as well as, operating a Discord channel for several years, but only recently did we get into the software world heavily. We've been running the Discord community, I guess at this point now for like 3 or 4 years. And there are many traders in there who have been along for the ride for this whole time. So it's got to be cool. And some of you guys who even watch the live streams have been in the Discord for a very long time as well. So it's cool to see. We've got a great community of people there. And I've met many traders from all over the world. So it's been a fun ride. Anyways, let's go back to the Edge Finder here, see what's going on. I've made this point several times, but I'm going to make it again for the newer people in here, guys. We have, in terms of COT data, this is what we are looking at to track what smart money traders, quote unquote, for lack of a better term, smart money is doing. This is basically just looking at institutional traders, right? The smart money in the room is institutional traders, the professional money managers, hedge funds, banks, people who, again, are very focused on, professionally managing money. We can actually see a delayed look at what they are buying and selling. Now, what I notice here is that gold is the #1 most bought, proportionally speaking, in terms of interest. So there's long contracts and there's short contracts out there on the futures market in gold, right? Well, from the institutionals that report we see a very, very preferred buy side interest on the gold market. Flip that on its head, and you could take a look at the yen being the most shorted of the list. So what does this tell you? Well, you've got gold here, you've got euro here, you've got oil here, platinum. These are sort of your heavily bought assets on our COT data, right? Flip it around, you got JPY, CAD, S&P, bond yields, right? So what do we do with that? Well, if we know that institutional traders are very long gold, which is part of the reason why I am very long gold as well, right? We can track what the professional traders are out there doing. We can also do the opposite effect. We can look at retail. What is retail doing? These guys tend to lose money, unfortunately. And so if we know what they're doing, it can also be a way to avoid potentially falling into the same sort of pitfall that many retail traders are up to. So right now, if we're looking at gold, there's not much of a preference. You've got about 50-50. But feel free to pause if you guys are watching indices. You've got German 30, the Nikkei, you've got the S&P, you've got the NASDAQ, the FTSE, the Dow, right? We can see that in terms of indices, retail traders are very, very much stacked on the short side. So kind of an interesting little bit of information there. Now, again, flipping back to the major currency pairs, feel free to pause the stream if you need to, if you want to take a screenshot or whatever of what's going on here. We are looking at retail sentiment for the major currencies. So right now what we see is that NZD USD is the most shorted of the majors, and USD CAD is the most bought of the majors by retail traders, meaning losing traders are very much long dollar CAD and very much short NZD USD. Now, when I say losing traders, that's pretty harsh. You can still see NZD USD go higher, and you could see dollar CAD. You could see NZD USD go short. It could go lower, and USD CAD could go higher, right? Just because retail is buying or selling something does not necessarily mean or guarantee that the price is going to do the opposite. It's just that very often it does, and very often it's worth noting what the crowd sentiment on something is doing. No indicator is the holy grail system, as far as I know from all my years in this stuff and all my conversations with, I did a podcast series for a while where we interviewed a lot of professional grade hedge fund money managers, people like this. And every single time, there was never, when I asked that sort of question, is there anything that sort of gave you, a major edge? It was a simple indicator that people are missing every time. Answer was no. It is just hard work, small edges compounded over a long period of time. This is the sort of theme that professional traders adopt and that new traders refuse to accept, right? New traders who want to get rich quick, they don't want to believe that it's hard work and that, an indicator can't be a holy grail. Retail sentiment is a great indicator, but it's not the all-in-one indicator that many people will think it is, right? It's a useful tool. It adds some insights, I think, but it's one tool in your toolbox, right? If you were to fix a car, you probably wouldn't just use one tool. You'd use many tools, right? And you would use all those tools together, combined with all your knowledge that you've built up about fixing a car. Not that I have much of that. That's how you would fix a car, right? So it's kind of a similar concept to trading. So anyways, we had some other stuff. We had the Bank of England here this morning. For me, it was 7 a.m. just before I got on here. You had the Bank of England's monetary policy. They raised rates by 25 basis points. And I put out a tweet this morning. If you guys are on Twitter, by the way, real quick, let me see if I can show you this. If you guys are on Twitter, feel free to follow me on Twitter. I am sort of newer to Twitter. If you guys would like to follow me on Twitter, I'll drop the link in the chat. If you guys have a Twitter and you use it, I've been on Twitter for, I would say, about a year now, sort of semi-actively. It is my favorite social media platform besides YouTube now. So if you guys have Twitter, I'm pretty active on there and would love to connect with you there. I just dropped a link to my Twitter if you want to follow it. But yeah, it's an interesting point. I made the point this morning on my Twitter, basically, that inflation in the UK is very, very high, still double digits. In fact, let's pull that up for context. For those of you who are watching pound pairs, let's make this point really quick. We've made it before. For the regulars, you know what I'm about to say, but for the newer traders, let's take a look, or the newer viewers. So here's UK and here's US inflation. Inflation yesterday, CPI headline, ticked down to 4.9% year over year. UK is more than double that at 10.1% inflation year over year. Think about that, guys. If you, my friends in the UK, that is hard. I mean, it's hard everywhere, but that's real hard, right? 10.1%. What that does is it causes cost of living crises, right? It's a serious problem. If your money is losing value that fast, rents skyrocket, groceries skyrocket, gas at the petrol, if you call it that, right? Whatever you call it, right? Prices go parabolic, and they have done so in many places. The US, it feels like the same thing, but 10.1% is crushing to an economy. So the Bank of England knows this, and they want to probably continue to raise rates to get this inflation on par to start coming down, right? So today they raised rates yet again. This is the 12th time that they've raised rates in the UK, okay? Point of that is, when you have 12 rate hikes, but still super high inflation, it causes some interesting things for the pound pairs. I think the pound is likely to continue to stay strong against the dollar as rate hikes, as we know, cause demand for a currency. So as rate hikes potentially continue, it's possible the pound could be very, very strong here going forward. Guys, we're going to take a quick break. I'm going to talk more pound pairs in just a moment. We're going to take a quick break, hear from a commercial from one of our sponsors, and then we will be right back. Check it out.
Attention, A1 Trading Show fans. Are you looking to get access to the Edge Finder for free? Our partnered broker 8cap is offering fans of the show 100% free access to our trading software. To get your access, all you have to do is click the link down in the description, sign up with 8cap, deposit $1,000 or more into your personal trading account, and then just let us know and we'll get you hooked up with the Edge Finder. 8cap is a regulated broker, offers many assets to trade, flexible leverage options, and has amazing customer support. Click the link down below to get started, deposit $1,000 or more into your personal trading account, send us a message when you're finished, and we'll get you the Edge Finder for free. Now, back to the A1 Trading Show.
And we're back, and we're talking about pound pairs here, guys. So pound specifically has seen a pretty sizable pullback here, especially against certain currencies like the yen. Look at the pound yen here this morning, which is trading down pretty aggressively. And the question is, at what point is the pound a buy? Well, here's the thing. I like to consult the Edge Finder on things like this. The only two that we have on the list right now as perspective or possible buys are pound Swissy, pound yen. Pound New Zealand comes in as a possible sell, so that's not super ideal. If we're talking about buying the pound, if I was to do it, it would be against one of these two guys here, pound Swiss, pound yen. So pound, let's go look at pound Swiss here, because pound yen, I would say the chart looks pretty rough. Pound Swiss, however, I don't hate this chart at all. Now, again, why the pound? So the reason the pound against the Swiss specifically, the pound, again, inflation problems there are running like crazy. And again, double-digit inflation, they're falling behind in terms of where other major central banks are sitting. I would be interested in potentially continuing to buy the pound, thinking that, again, Bank of England likely to continue to raise rates. We know this is almost certainly the case because, again, inflation being so high. We had Governor Bailey from Bank of England, from the UK, coming out and saying, we need to stay the course. We need to continue to get this inflation problem under control. They know this. They know that that is devastating to a economy. So pound Swiss is interesting. It's up on the Edge Finder as a possible buy. I'd like to pull up the full view here for a second on pound Swiss. GBP CHF. We'll take a look at this and let's see where we're at with this. So retail traders first, right off the bat, retail traders are 62% short on this one. Retail traders are betting that the pound Swiss will go down. If we take a look at COT data, we're pretty mixed. And when I say mixed, what I mean is that it's 50-50 on the pound, and the Swiss franc is net short, but not massively, right? 57 to 43, let's call it. It's not super intensely biased there. So COT doesn't really tell us too much. Retail tells us again that the crowd bias is to the short side on pound Swiss. And, you also have a pretty strong upward trend. In terms of monthly bias, this is the month of May, of course, and we see a very slight upward bias, nothing too notable. Of course, we need to watch out for June, which seems in the last 10 years to have a downward average for the pair. So perhaps a trade could be worth paying attention to. What I'd be looking for is a breakout higher on pound Swiss, retest, nice little sort of flag pattern here. Could be very interesting to watch out for on the pound Swiss. So that's a trade that I'm watching out for. Now we'll bring in Frank here, who is one of our traders here at A1 Trading. He's come on the show on a regular basis. You guys know him, you love him. What's going on, Frank?
Hey, how's it going?
Hey, did you get a chance to look at the PPI numbers that came out this morning?
I did. So I guess what my thoughts would be is so lower than expected. That means, and what you talked about yesterday was, or a couple days ago, was about the demand side of things, but also inflation. CPI and PPI are kind of good measures of inflation. So the lower CPI and lower PPI is probably not a very strong indicator that we're going to see another rate hike in June, or at least that's what I'm thinking so far. But regardless, the dollar is still, chugging along, which is interesting.
Yeah, the dollar did give back a little bit of its recent gains, but to your point there, it's still trading pretty much higher than the entirety of yesterday's sell-off that we saw. The dollar is I would say surprisingly strong here with everything that's going on. What are your thoughts on? Are you watching gold at all?
I am. I'm still in the gold trade from yesterday. Yeah, just basically what this news means to the gold market is probably, less hawkish Fed. So, good for gold.
Sure. Yeah, it's it kind of, I would say that today's numbers seem to have sort of complemented yesterday's numbers, right? Yesterday we got the CPI number. Today we got the PPI number. That's consumers first, and then now going further up the supply chain, we're looking at the producers, and with the producers number coming out to sort of complement further down the chain what we saw with the consumers. I think that things are headed tentatively in the right direction with inflation. It'll be very interesting to see if this shakes. I wouldn't imagine that this changes too much of the narrative of the Fed, but I don't know that they are sort of set on any more rate hikes. I think this could be sort of in support of just a pause. We've also talked, Frank, I think about like the idea that a rate cut or a sudden rate cut could be not good, right? It wouldn't be for the right reasons, right? A rate cut going against what the Fed has sort of projected going forward would signal that they think something has been broken. So we talked about this a little bit yesterday, but today's number, producer price index showing a moderate slowing, and then of course the consumer price index yesterday showing slowing as well in terms of the inflation issue. That is on course for, hey, things are going to sort of steady out. We'll watch the numbers and we'll slowly turn the ship in terms of monetary policy rather than just a sharp change the other direction, which would indicate potentially something broken. So,
right.
Yeah.
And I don't think that's what they're going to do. I don't think that's what the plan is. Even if it seems like it could be plausible, I don't think they're going to go for something like that just because, this whole soft landing narrative and the easing over time is definitely something they're going to keep their word on. Even with the bank struggles and all the regionals collapsing. Well, not all, but there's another one today. I think Pac West is now one of those. It declined even further today. Let me see if I can pull.
Oh, really? Oh, yeah. I could see it trading down in the pre-market by a good margin here, down 20% of the pre-market. A little bit of concerning there. And also, Frank, to that concept that you just mentioned briefly in terms of the S&P 500 here, we're actually seeing it trade lower despite inflation numbers coming out cooler. but it is exactly what you highlighted in that the producer price index showing slow in the prices that are coming out could be hinting at weaker demand from retailers, wholesalers, right? The supply chain showing some weakness further up the chain, of course, is potentially good in the sense that monetary policy may be sort of working, but it may also have impact on indices and stock revenues going forward. So it's not a ginormous report today. It's just a slight tick down. I don't necessarily think it's too worth reading into. What do you think on indices? Are you bullish? Are you neutral? Where are you at with them right now?
I'm pretty much neutral overall on indices. I do think that, I mean, we've talked about this a lot already, but I think we can probably get another test in the 4200s just above this double top level. But I don't think there's really any more upside after that. I think it'll probably retest the lows and even touch a little lower as it's been doing for the past couple months. So
very cool.
Not
yeah,
limited I think, upside in more range bound markets like we all have been saying.
I'm kind of on the same boat, and it seems like you and I are both sort of oriented, more focused on gold right now. I've not been really trading the indices, but I'm very keen on thinking that we could get that retest of the highs on gold. Again, with these inflation numbers sort of complementing that, it'll be interesting to watch. Frankie, thank you for coming on the show. As always, we've got a couple guests that are in the queue, so thank you for tuning in and being a part of the show. As always, you guys make sure to subscribe. We'll have Frank back for the next one probably tomorrow. Frank, have a good rest of your day, man.
Thanks. You too.
Cool. Now we're going to, real quick, we're going to bring in our guests here in just a moment. But before I do, let me make sure to remind you guys, if you have not already joined our Bitcoin giveaway, we are currently giving away $500 in Bitcoin this month. If you guys have not joined the giveaway, here's how you can do it. It takes 2 seconds to do. Click the link in the chat right now. It's just been dropped for you. Click that link. It's going to take you to our giveaway center or our chat box. If you open up a chat with our team there and just let them know you want to join the Bitcoin giveaway, we're giving away $500 at the end of this month. All you have to do to enter is just message us now. So there you go. And enjoy. Good luck to you. Now, let's say hello to a new trio that we're forming here. We've got Miko and Marco. What's up, guys? How's it going?
Hello.
I'm good. Hello.
Hey, so Miko, you got your headphones all set.
Yeah. Sound is working this time.
All right, awesome. So guys, so we've been doing this new theme as I think Chandler and James let you know. We're trying this new concept where we bring traders in together, we go over charts, we go over markets together, and I think it's a lot of fun. The audience seems to really enjoy it. So I'd love to get you guys' take on some of the post news charts that we're looking at here today. So maybe Miko, you could start us out. What are you looking at? Is there any chart that you're most interested right now?
Yeah, well, I'm currently trading CAD CHF. I was in it since Tuesday. It's been some consolidation, very, very annoyingly, but it looks like I think the news has played out in my favor. Starting to see some momentum to the downside.
Okay.
But overall, I'm quite bearish on the pair. We have a very healthy downtrend on multiple time frames for this one, as you can evidently see. So I'm still looking to see if I can catch that next wave to the downside. I've got a couple of targets there for me. So I'm currently short on this one. There's a few other pairs that look okay, but they need a little bit of work. So I'm looking to short UAD if I can get a pull back, another lower high. Looking for another down move. Pound yen looking interesting, but I'm staying a little bit away from the pound pairs at the moment after news that just come out. As the CAD, I'm looking to see if we can start breaking some new highs here. See a nice little break and retest. I'm looking at a very big bull flag on the daily chart here. Big impulse correction. Looking to see if we can come back into the highs. So if we can start taking out some highs here for NZD CAD, which we may or may not do, but if we do, I'm interested on the retest. And NZD JPY, I'm looking to see if we can break out of this big consolidation. Recently, we had a confident daily candle closure above. Looks like we're coming back for the retest now. So I'm going to see what type of price action we can get in this area. If it's good, I'll look to go long. If not, I'll take a pause. Seeing some nice bearish momentum, but yeah, I need to wait for my confirmation before getting involved. So yeah, that's kind of the pairs I'm looking at predominantly right now.
It seems like It seems like, Miko, that you've got, from the ones that you just mentioned, you've got a lot of short bias on the CAD right now, because you mentioned being short bias, CAD CHF, which I've got a chart pulled up. I really like the way this one is looking. CAD CHF on the daily chart. And I want to add some commentary here, and then I'll ask Marco his thoughts on the CAD pairs as well. CAD CHF coming up into this level of resistance, as well as your idea on NZD CAD. One thing that I find very interesting is that if we examine the Canadian dollar here for a second, in terms of smart money, big money is very short on the CAD as well. In fact, in terms of, we could isolate the CAD for a second and just take a look at this. So what you can see is that the Canadian dollar has a 74% short ratio. So this is looking, of course, at the commitment of traders data. It's giving us insights as to how much, how many contracts are long, how many contracts are short, and percentage-wise, we've got 74% short on the CAD. So to your concept there, Miko, I think that's like some nice added confluence. You also mentioned NZD CAD, which I think is very interesting. If it pops through those highs, especially on like this 4-hour chart, there's that potential for just a nice trend continuation. So I like that as well. Marco, in terms of CAD pairs, do you have any that you're interested in, or is it not really something you're trading? What are your thoughts?
Yeah, I don't trade any CAD pairs live, but just be looking at the price action. For this one, I would say it's kind of forming a possible cup and handle or V reversal in a range, so that's the same thing, but kind of wants to push up. So yeah, what I would wait is for a breakout to the upside, get some momentum, get some green candles, and then I would look for a nice entry setup, like a flag or a break and retest. But again, it needs to break the upper level with conviction. Yep.
And Marco, feel free to share your screen if you have not already. I can't see if you have, but if you'd like to share your screen, you're welcome to take over if you have anything you're looking at. So yeah, no, I'm kind of with you on that with the sort of upward trajectory here. This pop above this, I think, could introduce sort of new buyers, especially against the Canadian dollar, which, as we mentioned, has that sort of wind in the sail, if you will, from the commitment of traders data that shows institutional money is very much stacked short. Miko, we had a big reaction today in terms of the PPI numbers. The dollar sold off initially. Do you have any dollar specific pairs that you're watching? Anything that you're interested in on the dollar?
Not really. The DXY has been in a complete mess, to be fair, over the past few days, maybe a couple of weeks. Yeah, a few days. So overall, dollar's still pretty bearish. So I'm still seeing more downside for it. But in terms of me trading any dollar pairs, Euro USD looks like it might be breaking to the downside here. It's still got some little bit of support here, and it's a little bit corrective for me. This type of breakout is not favorable. So if you can pick up some momentum and really start ripping to the downside, I'm looking at potentially a big reversal for Euro USD coming to some major highs up here. You can see multiple attempts there on the daily try and break through. Overall, doesn't look like Euro USD is successful. So if you can start picking up some pace to the downside, start taking out a few more lows, then yeah, some pullbacks and some shorts do look good. Pound USD is still actually a little bit bullish. Still gives us some higher highs and high lows, but overall it's not really really confident bullish structure. So I'm not so keen to trade it. So I think Euro is at the top of the list for me, but it's got some work to do before I do anything with it.
Fair enough. And Marco, what do you think? Any dollar crosses? And we've got your screen now, so if you want to show us, we've got you on the thing. Cool.
So most of the dollar pairs I trade 3 of them: EU, AU, and GU. And most of them have been pretty range bound and slow on the 1-hour chart in the last, I would say, 3 months. So I'm seeing nothing. Possibly like a small descending here on EU, but just very corrective. I'm not seeing sustained momentum. So I'm just waiting for a large breakout to the upside or to the downside. Let me just grab my tools. So I'm just waiting for consecutive candles up and then an entry pattern or consecutive candles down. Also, the pound pair has been really corrective as well. And one thing I do notice for the pound is, well, it does like to range for a really, really long time. But once it does have a push, the push usually continues very nicely. So For me, all of them are very corrective. I'm mostly focusing on the Japanese pairs. So for me, for example, EJ right now looks very good. I'm getting this push down, descending here. I'm getting this sort of a pattern. For me, this is a very high probability to continue trending to a downside. So I'm definitely looking for a sell on most of the Japanese pairs. So my focus is mainly on the JPY.
Okay. Yeah, no, I was going to ask you next about the Japanese yen. So on that euro yen, Marco, beautiful chart, clearly. Like it's sort of just waterfalling to the downside, which I'm pretty sure, you know, all three of us, we like those trending markets. We like those markets that are moving sort of fluidly like that. How would you enter a move like this on euro yen? Like where, like, would you be waiting for a pullback up into, you know, like 147.5 area? How would you look to enter something that's already flowing like this to the downside?
Well, I would wait for a pullback, but it would not be price dependent. It would need to be a pattern. For example, a flag such as this one, a small one preferably, or for the price to just pull back a little bit, then break the low again and retest the low like this. And then I just look to sell, get in on the retest. So,
and how would you manage a stop loss with that as well? So like, I like your concept there. So you get like a very slight, like dead cat bounce kind of idea. It falls through the lows. You get in on the retest. How do you manage a stop in that case?
Well, I use a fixed stop loss for all of my trades and all of my pairs. Basically, let's say a break and retest entry would form here. Then I would just put a 12 pip. So my entry would be on this level of the low, and my stop loss is always 12 pips. So I just put in a 12 pip stop, and then I use a trailing stop loss to follow the price as it continues down. So I never have a take profit. I just basically keep moving the stop loss on these minor highs, as you would. So really simple stuff, and it is about maximizing the winners and minimizing the losers, because that's what you want to have. So I do have, the win rate is very low. I have like a 30% win rate, but the average risk to reward is around 1 to 8. So I do wait for a long time for the big winners, but when they do come, they do usually explode to the upside or to the downside.
Yep. No, I can relate to that. I have a low win rate as well, and it can be tedious waiting for the big move, but when they happen, it can be very rewarding. So Marco, you're watching the yen pairs. Miko, in terms of yen pairs, you mentioned some of the are you trading CAD yen? Are you looking at any yen crosses at all, or are you avoiding them?
No. Well, a few of them I'm avoiding, but NZJPY, I'm looking at some buys because it looks like we are starting to break out of this high time frame resistance here on the daily at 85. So I'm basically looking to see if we can hold this area on the retest and then basically continue this momentum we've seen over the past few days back to some highs up there on the left. So as you can see, the market is incredibly bearish right now. Excuse me, incredibly bearish right now. So I need to wait for some entry confirmations at this level. I normally use the hourly time frame to get into my trades, and right now I'm not really getting much here. So if I see the market start bleeding through this, especially on the daily candle closure, if I see a daily candle closure back underneath this zone here, so today's candle, I will definitely it would be an invalid setup. So I need price to start developing again and getting back above the area. But I'm looking for some longs on the retest of this, for some buys in pound yen as well. I'm looking to see if we have some buys as well, but price is still a little bit sensitive from the news that we just had. So I'm waiting patiently for this one, but I've got some good confluence into this area. So I'm seeing if we can get a bounce from this 168, 100 mark. And then if we can get a good entry confirmation, some nice wicks to that zone, I'm looking for a move back to resistance. Overall, pound yen is still pretty bullish on higher time frame, still getting that bullish structure there. But yeah, confirmation is an important part of my trading. So we'll be waiting to see what we can do in this area. Right now, still spilling over, so need to be patient. But yeah, if we start breaking through this confluence as well, start breaking through the support and the trend line as well, then I'll discard the pair too. I mean, it might mean that price actually wants to continue low and place a low high and actually reverse. In that case, I'll look for the bearish setup. But as of right now, the buys are still at play. You just need to wait for some confirmations. So those are the two yen pairs I'm looking at, NZJPY longs and pound longs as well.
Cool.
So,
yeah. And I just wanted to also take a pause for both of you guys in the audience. For those of you guys who are with us here today, this is our first time doing this trio effect. I think it's going well. Miko, Marco, both fan favorites on the channel. I want to also remind you guys that if you have not already, make sure to go to subscribe to these guys. They both have their own YouTube channels. They got great commentary, very technical traders, which of course we love on the channel. You got Marco's channel here in the chat. We've also got Miko's as well. So make sure to go subscribe, check them out if you want more of their content. Also, I want to add some commentary to what you guys just said about the yen pairs, because again, you guys have that very technical background, and I'll add just a little bit of my own in terms of fundamentals commentary for the audience who likes that. So in terms of the Japanese yen, my take on it is, I guess, twofold. To Marco's point about momentum, the Japanese yen pairs, you guys, I'm sure have noticed this. When they move, they really move. Like they can move hundreds of pips very, very quickly. And so if you get something where, you're looking at like we just discussed, like pound yen, if this thing breaks, it very quickly could rapidly decline, right on down to the next level, like 165.5, right? It could move very, very quickly. So yen pairs, they have that nature to them where they can flush very quickly. Due to its risk-off nature, the Japanese yen tends to sort of trade around a lot of fear, whereas if people get fearful about the markets, they flood into the Japanese yen very quickly. And so that is why we often see those big flushes on yen crosses. Now, I think to Marco's point, trading that momentum can be very lucrative. It can be very profitable to try and capture those quick flushes. And then to Miko's point about consolidation and waiting for some sign of strength, I think that's really important personally when trading the yen pairs, because of their nature to just sort of go and go and go. You might want to wait to see, some sign of strength before looking potentially at buys. Also, in terms of central bank status, I think when you take a look at the pound against the Japanese yen, I generally would lend bullish on the higher time frames, not necessarily in the lower time frames, but on the higher time frames, due to the fact that, okay, you have sort of a divergence in central banks. When we look at the UK, the pound, as we mentioned, has very high levels of inflation. This morning, they reported higher interest rates, and that was the 12th time they raised. Well, that shows in essence, an attempt to get that inflation problem, double-digit inflation they've got going on in the UK. Well, the Japanese yen is the actual opposite right now. Not only are they not raising rates, they're actually even flirting with the idea of potentially even cutting if need be to keep the Japanese economy stimulated. So we see a strong divergence in central bank monetary policy. These are driving forces in the markets, especially when looking at the daily, when looking at the 4-hour chart. It's a very important driving factor, and why we've seen so much strength for the pound yen. So just a little bit of confluence there. I think if you get some signs of strength like Miko's talking about, at some point there may be a buy, but to Marco's point, they can slippery slope all the way down very quickly in the shorter term and lower time frames. So good stuff there, guys. And remember, we just dropped their links in the chat. Make sure to go subscribe to them if you have not already. So maybe I'll ask you guys a little bit. I'll be a little bit selfish. I'm trading gold right now. I'm long gold, mix of fundamentals and technicals. Marco, what do you think? Gold, you may or may not trade it, but do you have any insights for us on what's going on with gold?
Well, the strategy I trade doesn't work on gold for some reason. So let me just open the charts. Basically, I don't pay any attention to it. I have tried trading it, but it's not for me. So for me, it's very choppy. And what I'm looking for as a trend trader, I'm looking for sustained movement to the upside or to a downside. And currently on the 1 hour, which I only trade the 1 hour, this is very choppy as well. So I'm seeing like a push up, then consolidation, push down, consolidation. So just no direction as of yet. On the larger scale, also, I can't really see anything as for my strategy. I see this consolidation, and then we just push up out of it, and then we drop down. So yeah, for me, as a trend trader, I would wait for possibly something like this to then get in. So this up move or this one that is what I would wait for. And current price action is not telling me anything. It's just being a bit stagnant, I would say. And I also look at, to be honest, only the last 5 or 6 days of price action. So this is the only thing that matters to me. So for gold, that's kind of what I'm seeing.
Sure. Yeah, no, and that's the thing. This is part of the reason why we liked the idea of setting up this show more to be collaborative in nature, bring people together, is because, you know, as an audience, put yourself in the shoes of the audience. People are going to have differing opinions. They're going to focus on certain things. They're going to have questions about certain things. By bringing more than just one voice, that's kind of our goal, is to take on different markets with different views. So to your point, if you're trading like the 1 hour chart, gold has been really choppy. It's been really back and forth. We saw a big spike. You know, last week it was erased when Jerome Powell came on, and then sort of has climbed back. So it's been all over the place. And something, of course, sort of has to happen to really cause a big trend. What about you, Miko? Do you have any ideas or analysis on gold right now?
Yes. Well, I do have an opportunity I am looking at, but I'm a little bit hesitant with gold. It's just a little bit choppy these days, and I don't like the fact that it came in respect to this resistance here. I think that was on Wednesday. Yeah, Wednesday. So yesterday. So had a nasty reaction at that resistance there. So although you know, the way I trade, I look at the kind of the major swings of structure. So the market is still printing higher highs and higher lows, but the fact that we're starting to respect resistance here is a slight red flag. It does mean that, okay, we are still maybe bullish, but we're taking a pause and could maybe look to turn around potentially. So I'm looking at some buys for gold, but a little bit further down, closer to the 2K mark. So back into this level of resistance, which we tested, I think last week on Friday. So yeah, we tested last week on Friday. So I'm looking to see if gold can come back to this area, and then I'll look to see if we can get a bit of a pop to the upside. But I won't be looking to hold that trade for long, because like I said, gold's showing a lot of signs of exhaustions. We're not creating any new highs anymore. I still do think gold's going to create those new all-time highs. You know, very, very close, around what, 2075, 2070, something like that. So I do still think we're going to go pierce through those, but it might be a case where we take a bigger dive first and then we go break them, or maybe gold just bees gold and then just flies to the upside for some reason. So yeah, I still am long-term bullish for this one, but yeah, nothing quite there for me just yet.
Fair enough. And if I'm being boastful for a second, I actually was able to catch that pullback that you mentioned right around. I caught her at 2005 an ounce, I think, or 2006 an ounce, somewhere right in there. It was awesome. I wished, to your point, when it came back up again, I was like, oh, come on, do it. Break that high, right? And it just did not. Unfortunately, I trailed out of or I guess fortunately, I trailed out of it during sort of all the volatility yesterday. Decided to re-enter towards the end of the day. Again, just sort of anticipating a potential break to new highs. It's partially technicals, but it's also fundamentals as well for me. With gold, there's just quite a few things stacked up that are sort of concerning about markets right now that sort of seem to be on the back burner. In the United States, we have the debt ceiling situation, which of course could cause some fears if you know, the U.S. Stops paying debt briefly. Even it could be a concern for markets, and you know, could have some upside for gold. You also have the banking situation. Right before you guys got on, Frank was mentioning another developing situation. Yet again, we have this PacWest Bank, which is another one that's been closely watched by the markets. It's another one of these regional small banks that's been under a lot of pressure. It's down 23% here pre-market. We're going to open up here in the United States. The stock market opens up in about 10 minutes. So just another developing story. As we've seen several of these banks collapse, it's been a little concerning for markets. And of course, that will have impact on all of our trades, whether it's dollar, gold, stocks, indices, doesn't matter. If that fear surfaces, it will throw some of these things into potentially some bigger trends, which again, if you're purely technical, you'll still see some of the result of that anyway. So kind of cool stuff there. Speaking of indices, I'm a big fan of trading the indexes, you know, trading the S&P, the NASDAQ. S&P taking a bit of a beat here today. Marco, any thoughts on indices? You may or may not trade them? I'm still going to ask you guys. It just put you on the spot. What do you think on the S&P right now?
So right now for the S&P, well, for me it's kind of flat. So, and I don't trade it. I only trade Forex pairs. So what's the ticker that you used?
SPX500.
SPX500. So for me, again, kind of flat, as I'm only looking at the last couple of days of price. For me, I would have been looking, for example, for a buy right here in this momentum. But right now, very flat, so I'm being patient. I would be patient if I was trading it live. Prior price, again, very choppy, so I do not believe my strategy would have worked, as the moves are very rapid. The drops are very rapid, and then we kind of slowly push up, then we drop. What I'm looking for is more slower candles and more sustained price. So this up move would have been good, this one as well. But yeah, right now, kind of flat. So not for me as a trend trader on the 1 hour chart. And I have a question for you guys. So I know I trade only 6 Forex pairs, so I don't have a watch list per se. But how do you assemble your watch list at the beginning of the trading day? So do you go through all of the Forex indices gold, or how do you do it?
Miko, you take it first. I'll answer second.
Okay. Every weekend, firstly, I trade all FX major and minor pairs, and I dabble in gold and silver as well. But my bread and butter is major and minor pairs. So there's roughly around like 26, 27 pairs that I do look at. So every weekend, I will go through my analysis primarily in the weekly, daily, and 4 hour time frame, and I'll forecast the week ahead. So it takes me about 2 hours, 2.5 hours to do that. Normally do that on a Saturday, and then for the week I'll pick whichever has the best characteristics. So in terms of structure, seeing good momentum, good levels. So I just pick 5 to 8, which are looking the best. And then sometimes during the week I kind of take some out and slip some in if the structure is not kind of playing as I would expect it to do. But yeah, on the weekends, mostly where I create my watch list, and I normally ruffle it down to around 5 to 8 pairs. But yeah, I'm just basically looking at momentum, key levels, and basically just wish for the best opportunities for the week ahead.
Yeah, that's a good answer, Miko. And I think for me, it's a little bit different just because of the nature of my style of trading being more sort of focused on the fundamentals primarily. I'm often looking for like story trades. So like I trade a very wide range of things. I can trade currency pairs, gold, indices. I can even trade bonds. And the reason for that is because the fundamental story, as much as, oftentimes people say, well, I trade this or I trade that. They're all sort of impacted by the same fundamental stories, just in unique ways to a degree. So if you know generally how, an inflation report may impact gold, or it may impact a currency pair that you're watching, that's for me. I don't take so much time to create a purposeful watch list as much as I pay attention to fundamental trends and stories, and I trade what seems to have the most clear picture to me. So like, for example, right now, I just mentioned a little bit of like with gold, I'm watching that story that's been playing out with regional banks, and I'm paying attention to, of course, also, things like the COT reports that we paid attention to earlier. I use my software that our company builds to generate a watch list to some degree for me. It combines some fundamentals with some sentiment. I'm also looking at like extremes. Like if I'm looking at like retail sentiment, this is another one I really like to pay attention to, because like I could tell you right now, just by looking at this, I may not always trade dollar CAD, but if I'm trading dollar CAD, a lot of people are buying the dollar CAD right now. So if we know that the retail crowd is like very long dollar CAD, I would be more interested on this pair specifically at potentially looking short. So, and that's just generally following or going against retail sentiment, which tends to be on the losing side of trade. So it kind of varies. It's very much what's showing up on our software tool, which combines sentiment as well as economic numbers to find trends that are not just purely technical, but also fundamentals. But again, the cool thing is with these shows where we bring different people on, you guys coming on, we have Ivan, we have a various list of unique traders. Everyone has their different style, their different time frames, and yet everyone can find their own path to trading success, whatever that means to you, whether it's slow and steady gains, trading with higher risk, whatever it means for you. It's cool to just have these show environments where we can do that. I did drop those, or I had James, the producer, dropped you guys' links to your channel. I want to have those dropped one more time here before we close out the show, just so that you guys can make sure to go follow, go subscribe to Miko and Marco. A big thank you. Can we get some thank yous in the chat for them coming on today? This is I thought this was a lot of fun. Did you guys, was this cool doing the trio dynamic?
Yeah, this was great. This was great. Yeah.
Cool.
Yeah, nice.
I think it's a good way to make trading friends. It's a good way to. Yeah. Cool. Well, thank you guys for coming on. Again, we'll drop the links to your channels in the chat so people can go find you and follow up with you there. And thank you guys for coming on the show.
Yep. Thank you very much.
All right. We'll see you next time.
You.
Cool. So yes, Miko, Marco, that was awesome having them on. And again, just make sure to go shower them with some love, and thank you to the people in the chat who are just showing them some love already. So appreciate you on that. I thought today's show was really good. We had a good mix of fundamentals, and of course, bringing on Miko and Marco, both technical traders. It's always good to get a bit of a dynamic there as well. If you haven't already, check out the new office setup. We got the studio. I think it's looking pretty good. I had some help from the team getting that going, and it was pretty successful, guys. Also, I want to say, if you have not already, remember we are doing our $500 Bitcoin giveaway. In the chat, we're going to drop that one last time in case the latecomers, if you did not hear about already, we're giving away $500 in Bitcoin right now. To enter that giveaway, click this link that's being dropped right now, right here. You just go to this link, chat with one of our support reps, and let them know that you want to join the Bitcoin giveaway. Have a good conversation with them, tell them about your life, whatever, and they'll enter you into the giveaway for a chance to win the $500 at the end of this month. Hey, thanks everybody for coming on the stream. It was a great one as always. Blessed to be here, and hope you guys have a great rest of your day. We'll end the stream there. Again, click that link, join the giveaway if you have not already, and we will see you back tomorrow. Catch you later.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our... Thanks again for watching today's show. Our goal at A1 Trading... Thanks again for watching... Thanks again for watching today's show. Our goal at A1 Trading is to continue...